about the markets and what investors should be doing during these volatile times. We have a bull and a bear here to weigh in. For the bulls, Adam Bold, founder and CEO of the mutual fund store, and for the bears, Tom Lydon, president of Global Trends Investment. Adam, let me start with you because I want to ask you about these outflows for mutual funds and what you make of them. According to the latest stats in the last week, almost 18 billion came out of mutual funds. Compared to the week before, it was less than 1 billion. Why the huge jump, and what does that tell you about where we are in the cycle?
Well, the huge jump came because the market was terrible last week. And, you know, the retail investor tends to sell at the wrong time and to buy at the wrong time. And historically, when we have seen redemptions get to these levels, we're at record redemptions, that has marked bottoms in the market before. Yeah,
Tom, what about that? I mean, it seems like a bullish sign to me when you see that many retail investors running for the hills. You know, what do you think?
Well, absolutely. On the other hand, who's to say that it can't get worse? Everybody's looking for capitulation, but it just hasn't come to this point. So my feeling is there's going to be more downside.
Adam, let me ask you on the question of profits. There's sort of two schools of thought. One is we have to look at current profits, which are plunging. That's a huge negative for the stock market. Not even I can blame Barack Obama for that because, frankly, all that started in the recession last year. On the other hand, guys like Schiller, Robert Schiller of Yale, say you should look at a 10-year average, and we're actually a little cheap on price-earnings multiples. Profits have come down, but you got to look at it over a long period of time. What's your take here? In your judgment, is this market cheap or is it rich relating to price-earnings multiples?
Well, Larry, there's no doubt in my mind that the market is cheap. Every indicator that I look at, the things that I've been taught in terms of economics, make the market look cheap. The problem that this market has had is the fact that the market is cheap has been outweighed by the fact that we have uncertainty coming out of Washington. We have a level of negativity that I've never seen in my lifetime in this country, and those things have outweighed the fundamentals. What I do know is that ultimately the fundamentals will win. Now, I don't know whether that happens next week or a month from now or 6 months from now, but eventually the fundamentals of this market will move it higher. Just a question of when.
All right, Tom, you heard Adam on that, putting a positive spin, but I want to give you a whack at the issue because, look, profits are the mother's milk of stocks, and no matter how you slice the pie, they've been in a free fall. The fourth quarter was a disaster. The first quarter looks to be equally bad, if not worse. We're looking for a bottom in stocks, but we're also looking for a bottom in profits. What's your take?
Well, absolutely. And who's to say things can't get cheaper, Larry? And that's the idea. In 2 weeks, we're going to start to see earnings reports for the first quarter, and they're probably going to be more ugly than people think. However, if you look at certain areas of the market, there are little jewels. And geez, Larry, last week when I was looking at that dry shipping index, I was thinking about you because, boy, you know, that with that stimulus plan in China maybe kicking in, and with copper prices moving up, there may be some areas, and with a couple ETFs,
I have a special,
like what?
In the morning I wake up, I have a special Google alert for the Baltic Dry Index because I'm trying to glom on something positive.
Well, it was a great week last week, Larry, and again, with that shipping index up today, and with copper prices up, maybe that's a little bit of mustard seed out there for you, Larry.
Yeah, Adam, you had some picks for us today. What were they? The Loomis Sales Bond Fund, are these some of your picks?
Yeah, Loomis Sales Bond is a fund run by Dan Fuss, and he got absolutely creamed last year, but not because he picked bad bonds, but because of the lack of liquidity. I think there's a great opportunity for double-digit returns in a bond fund.
Yeah. Tom, you know, over the weekend I picked up Barron's and it said why we weren't going to go to 5,000, which I immediately cursed because that's like such a jinx. But then, you know, the Wall Street Journal took care of that this morning, saying that it's a bearish possibility. It's only about 25% away. And where do you stand on the 5,000 question?
Well, I'll tell you, I was at a Boy Scout camp out this weekend, sitting around talking to a bunch of
and they know where the market's going, the Boy Scouts?
all of them are not looking at their portfolios, and it's not going to go any higher until they get to the point where they're going to sell, and half of them will sell.
But the other front page story on the supposed sell-off in bonds, corporate bonds. Now, I took a look at the data. Investment-grade corporate bonds, they're off a little bit, but not much. I mean, they've had a heck of a rally in the last couple, 3 months. But junk bonds have, in fact, sold off, and the spreads have widened at them. Is that something that should be worrisome? What does that mean? This front-page story of the Journal, corporate bonds. I've heard a lot of smart investors on this program and my own this evening that talk about buying corporate bonds.
Right, and I think high yield looks really great. I mean, Larry, nobody is going to get the exact bottom. And just because it hasn't moved in the last week or two or last 3 weeks doesn't mean that it's not going to work. Here's your question. If you don't put money into this market, whether it be into high yield bonds or stocks, what are you going to do with it? Well, you could put it in a CD. You're going to get 2.5%. Now, the question is, do you have better odds of getting more than 2.5% in stocks and in high yield bonds over the next 12 months than you do with the sure thing in the CD? And I say, I don't know what's going to happen this week, but over the next 12 months, I think we got a good shot of getting better than 2.5% from 6,600 on the Dow.
All right, gentlemen, I have to leave it there.